Hello everyone. Welcome to the Baltic Horizon Fund webinar. We are going to introduce the fund's financial results of first half year of 2017. Today's host is Tarmo Korotam, Fund Manager of Baltic Horizon. The webinar consists of two parts. Firstly, the presentation, then we will be answering the questions. Feel free to ask and send questions during the webinar by using the question box. All questions will be answered after the presentation. Again, welcome and thank you for joining. Tarmo, I would like to invite you to start the presentation.
Thank you, Kristin. Hello everyone, also from my side. I hope everyone has had a good summer and time to regenerate the energy now for the second half of this year. We've also had quite a busy summer ourselves, and here I would like to give you some overview about not only the first half, but also especially the end of Q2 of this year, what has been happening in the fund management. I prepared a sort of a concise agenda, which I would like to talk about for the next 30 minutes approximately, and then leave around 15 minutes or slightly more for Q&A. Feel free to ask questions. I received some questions also over email, so I'm trying to address those while we go along. And but yes, feel free to also write in the question box. First, I will start then talking about the most immediate, most recent capital increase that we had in June. Overview of the fund will follow as the next one. The talk about the portfolio itself, what's happening there with tenants, with loans. Then go over some slides about financial results, balance sheet, and profit and loss. And yeah, some slides on loan, and then finish up with some overview of basically fund unit price development in the two exchanges where we're listed, and then, you know, as a final note, I will talk about the future outlook for second half of this year. We had planned a capital increase since already March this year. We planned it to be happening in May, June, and the reason for the capital increase was to be able to acquire some of the properties in our immediate pipeline. We worked together with our usual partners, Catella, LHV Bank, and Swedbank, and with a major focus on the Baltic institutional investors, but also on Swedish investors, retail investors, but as well as Luxembourg-based investors, both institutional and private. The result where we ended up actually you know, we were prolonging the capital raising for a couple of reasons in May. Main reason was actually that some of the larger institutional investors were conducting due diligence on the fund, as well as establishing routes how to technically hold the fund units that they are actually subscribing to. And it was interesting that due to this time limit, we were not able to bring them in. So the result of 10 million, it was lower than expected, and mainly due to this reason. Also, we saw that during negotiations in Q2, one real estate deal we could not agree on, and it was postponed to the future. So potentially in the future. So that's also when we were thinking not to bring in too much money at this point, but be able to work with some of those investors that didn't come in on a later stage, and be able to bring them in for specific investments at that moment when they're ready to be acquired, when some properties are ready to be acquired. As it is in this world, in this line of business, the due diligence processes take anywhere from 3 to 6 months, and it is not that easy to time the capital increases specifically to moments of closing of certain deals, but we are doing our best to do that, and I think we have also ways how to improve the preciseness of such matchings. A few additional words about the capital increase. We deliberately planned a strong marketing campaign around our offering, and the primary reason for that was actually to introduce the fund to potential investors that we're here, that this is an investment opportunity that exists. And I think that was a successful marketing campaign overall, both in Sweden and in Tallinn, in Estonia specifically. The result of such strong marketing campaign was actually that many investors bought units during the offering in the secondary market. I think that was very good because it assisted some of the investors, to sell, but also some of the investors to buy, and that definitely supported the unit price, especially in Sweden, which at that moment was trading at a slight discount to the NAV. Overall, we do have an investment capacity as of today of roughly 35 million euros, and currently we have used the equity to pay back Domus Pro bank loan, old loan, and we have signed an agreement with another bank for the new loan. But that has not been yet drawn in. Will be drawn in at the right moment when the acquisitions that we're currently negotiating are ready for closing. One final remark on the capital increase overall, and how we very much are focused on introducing this investment case to not only institutional investors in a region, but also retail investors. So at this point, due to legal restrictions, we are not able to market the fund in alternative investment fund in Lithuania, but we have worked towards being able to do that, hopefully in the first quarter of next year. As a sort of forecast, we are planning to consider potentially in the second half of this year, to bring in those investors that were not able to bring in June for specific acquisitions, and it will be only done in case we are really ready to make those acquisitions shortly after. About the portfolio. Since the acquisition of Duetto in March, we have not made any additional acquisitions as of today. So we have 9 properties. The good thing is that not a lot is going on in these properties overall. It's I would say business as usual. We have been able to retain a low vacancy rate throughout. we've been able to renegotiate some of the lease agreements and increase rents in certain cases. And as well, at the end of June, we had new valuations of the properties done. So almost all properties showed a slight positive tendency. I think overall we were definitely not in any way aggressive with or the evaluators were not aggressive when renewing the valuations. So I think our portfolio is still quite conservatively valued at around 1,900 euros per leasable square meter. Perhaps where the most activity was during let's say Q2, especially in the portfolio, was in Duetto. We do have a rental guarantee from the seller there, so the NOI that was agreed during the acquisition is guaranteed, but it's not only now guaranteed, so the seller doesn't have to pay the difference, because Vilnius Vandeness is moving into the building. So that was a strong victory, to have a very competing office market, and us coming out as a winner. So we have two anchor tenants now in Duetto. Vilnius Vandeness is moving in September, yes. So then we will release, in a way, the current or the developer YIT in covering the NOI difference. That was foreseen during the acquisition phase, so and that was agreed and structured accordingly. Then in Ukmalas Biroi, as well, very happy to have this property in our portfolio, due to the fact that in today's market in Riga, good quality properties that can offer very efficient premises and strong property management is limited, and we have a number of large anchor tenants there that are all expanding and all very interested in getting additional space. So that's been progressing very positively, contributing to an increase in the NOI. Also for the remainder of this year. Then we've had some extensive management happening in Pirita with some of the satellite tenants. They, after the opening, some of them, which was also a little bit expected, didn't turn out to be very strong, and we're now together with the seller, considering an improved tenant mix. So we're working on getting better names into the center that are also more of destination tenants, such as Rimi and MyFitness, which is working very well in Pirita today. In Q2, we have also considered internally a potential sale of one of the properties in the portfolio. So we have initiated the sales process of a Sky supermarket in Riga, and currently we haven't. Let's say that the process is ongoing, since the facade is currently being also renovated. But we have a plan to dispose the property potentially in the next few months. It is a small property in our portfolio, and we feel that maybe a bit too small at this point. It has been a very strong cash flow generating property, and I think we have maximized value in that building as of today. So a snapshot of the portfolio today. We have a gross asset value of 170.9 million euros. There is potential to increase it now with the additional acquisitions that we're planning, and also together with the completion of Domus Pro third stage, I think we will be reaching 200 million euros of gross asset value in the second half of this year, with the current capital structure that we have in place. Then the yield of the portfolio based on the latest valuation is 6.9. So it's I think a strong yield, and that has been very stable. And as I said before, occupancy remains very strong, close to 98.5%. Now, we're working very hard to deploy the equity that we currently have in the books, but we also don't want to feel pressured to buy properties that essentially don't end up passing our due diligence phase. That being said, I think the current capital structure of the fund, allows investments of maybe 1 or 2 investments potentially, with the NOI of 2 to 2.5 million euros per annum. So I think that's definitely an upside for the investors and for the portfolio, that once the maximum efficiency is achieved, once the equity is invested, then the cash flow generation will be improved, and quite considerably. A few more words about the portfolio. As we haven't made additional acquisitions, so the 10 largest tenants have remained the same. When Vilnius Vandenys is now finally moving into the Duetto property, then they will be the 7th largest tenant in our portfolio. So that will change slightly. We have about 175 tenants, and yes, one other thing, in Lincona we have been renegotiating now Swedbank's lease agreement as well. That is currently ongoing. So we aim to agree on the conditions during this quarter. Their old lease agreement is ending in the third quarter of this year. So we will reach an agreement by then. And perhaps last but not least, what's happening in the portfolio in Europa, after spending quite a lot of preparatory time to fix the parking, in Europa, together with the neighbor, the office building owner, and having the new system in place. Now we have also mobile parking coming there to make it very convenient. We are relaunching Europa Shopping Center to the Vilnius medium, emphasizing that we're really coming back, meaning that Europa is a leading shopping center here in Vilnius since 2004, but tends to have, after a questionnaire as well, maybe a little bit of a worn sort of impression in the minds of the shoppers. So together with the fact that there are new employees, new office buildings being built in the area, we really want to rejuvenate the sort of the reputation of Europa, where to make sure that customers understand that the parking has been improved significantly. First of all, then the tenant mix is improving. We have lots of new names coming to the center. Europa is really a dynamic investment, and it also shows quite well we know the general, when retail spending and habits of buying stuff, is changing in the minds of customers, and you really see the change of tenant mix there and types of tenants. Luxury is not what it used to mean for the customers. So with the new tenants that we're bringing in, and additional restaurants, gym is already there. So definitely focuses on rather allowing shoppers to feel also very socially relaxed in the center. So very exciting, and we have good expectations on Europa now performing better and better, and the strong marketing campaign that has now been launched in August will hopefully do the trick, as they say. Financial results. Yes, we have grown the fund considerably, over the past 12 months, and especially due to the new acquisitions that we have made. And there's been quite a few questions about the administrative expenses, especially expenses around the public offerings that we've had, and also the listings. So I can only reassure that the listings are now over. We've done 2 listings. We're not going to list the fund anywhere else. So those costs will not be occurring again. To raise capital, that has been especially in the past 12 months, quite a considerable cost item, and I'm well aware of that. It is because of, first of all, that we have only been establishing the investor base that we have today, and that has cost some money for the investors, and we've also been relatively small. Now, the bigger that we get, the proportionally less those costs will be borne by the investors, and I have full confidence that that the cost will decrease considerably over the coming capital increases, because we also have a strong investor base that we can now approach directly, and whose investment will not be bearing any costs at all later on, when they are, for example, increasing their stakes. Absolutely, I'm fully aware of the cost. And also, if you look at the cost of June's capital raising, then as a percentage, it was considerably less than the previous ones. I think it was around 1.5%, or actually closer to 1%. But as I said, that cost item is decreasing, which is definitely positive for the future cash flow of the portfolio. Then, yes, we do have some cash today. We're on a balance sheet which we're looking to invest. At the same time, even if it's not currently maximum efficiency, I think we're very strongly capitalized, and we can still deliver an attractive dividend. For example, we over the past 12 months, and despite of all the costs, we paid out 9.1 cents per each unit, and in 4 capital installments. Actually, the 4th one is now happening on Thursday. So let's say we're generally satisfied with the result, because if you calculate it to the June IPO price, that's 7% cash on cash yield to the investors. But I think overall, if we will improve the efficiency, get the costs down, and also the new loan agreements, the conditions will kick in, then I think there's strong potential there to to also have a very attractive dividend cash yield in the future quarters. Also, in regards to the assets and liabilities, we don't have a loan on Domus Pro today that has been repaid back, so that will change the balance sheet once it's drawn slightly. As of today, we have about 64.6 million units outstanding. We have approximately 4,500 investors, and it's quite interesting that you know all the units are split pretty much 50-50 between Tallinn and Stockholm. So it's quite balanced, and both stock exchanges seem to work quite well. Even though the activity is slightly lower in Tallinn, but still quite strong. I'll have a few slides about this later on as well. Somebody also asked me about the taxation. Now, what's happening in Latvia and how is that going to affect our portfolio. We have just actually ordered the analysis on how that may affect the portfolio or the balance sheet or the results of the fund, and it could be so that we would have to, under the new regime, book certain items such as, for example, deferred tax liability and other taxes in a different way, like we do currently with our Estonian properties. But I think I will have more information about that in the next webinar, because that's the analysis and our consultants, tax consultants that are doing the analysis, are also currently unsure of how exactly this will change the reporting of each of these items in the balance sheet. I think this is an interesting slide, and if you have followed this through, over the past 12 months, then you can definitely see the difference. These are basically the loans and the loan maturities. What we have now, for how long the cost of basically the loans are fixed for the portfolio, and the cost of debt is fixed. So you definitely saw, half a year ago, more of those balls on the left side of the corner. So that has been I think, very positive now that we have re-signed, as of end of Q2, almost all loan agreements. We still have basically two of them that are considered short-term sort of liabilities that we're still renegotiating those. And we don't have any expectations that those cannot be renegotiated at very attractive terms as well. But I think that's just showing that the loan portfolio we've worked hard on that, and I think the results are only to be shown now also in the next periods. This is a quick snapshot of sort of on an unnamed basis, what are our margins and how much do we hedge. There are still some changes, basically being made in this quarter on certain loans, but overall we feel very comfortable with the margin. Also very comfortable that the repayment of the loans, we have kept that very low, and that's the result of us aiming to lend at very conservative levels, so we can actually achieve very low amortization and also bullet loans in certain cases, so that the cash that we're generating in a portfolio does not go to pay back the loans, but goes straight to the investor in a form of a dividend. This is now moving on to the unit price development, and I think we're quite satisfied that that overall in Tallinn and Stockholm exchanges combined, we are as based on the first half results, the 7th most traded listed security in the Baltics. And as you can see, the primary listing is Tallinn, secondary listing is in Stockholm. So both of those are working very well, complementing each other. Also moving units from one stock exchange to another, that has been tested several times. It has a relatively small cost to it, so it starts to make sort of sense when you do it with 10,000 units or more, because that's usually when you also get better exchange rates from banks. So actually there's been quite a lot of not a lot, but some changes when investors have either changed from SEK to euro, from Stockholm to Tallinn, or they moved the units from Tallinn to Stockholm. But overall, I think that's a very good picture. We're continuing with openly discussing what we're doing and what is this investment opportunity all about. We are a REIT-like real estate investment trust-like fund. That means that the priority is on recurring dividends, and I think that has also been quite widely accepted as an interesting investment case in this region. So very happy about that. Few graphs, additional graphs about the development of the price. I'm happy to say that at least as of this morning in Tallinn, the unit price was trading at a slight premium. In Stockholm, it's at a slight discount today, but it depends on as well on the exchange rates that you would use to calculate. But also some investors I know in the past told me that they've tried to use, and I think they've been successful in using the arbitrage opportunities it is available sometimes in these dual listing cases, because the fund unit is the same. It's same unit, just a different market. I think an interesting thing to note here, that it's based on Q1, but it may have even improved slightly. But about 31% of all units are traded, are turned over, on an annualized basis in Stockholm, about 11% in Tallinn. So an average of 25% of all units being traded shows quite a lot of activity actually. And Stockholm listing definitely has helped help the liquidity of this investment for the investors. Unit price, yes, as of August, the unit price has definitely come back to I think to the levels where it should be, following the NAV, and I think as well, over the past 12 months we have become more. So we have explained a lot, what we're doing and who we are, what sort of investment this is. So I'm happy to see strong support of the investors in such dividend recurring, investment. So before the questions, I'd like to talk a little bit about the outlook, and some of these I mentioned before, but we have several properties in the pipeline, and I would say that 2 of them are in Riga, 1 of them in Tallinn. So we are definitely focusing on other countries as well than Estonia. So we're in various phases of due diligences, and some of them require a little bit more time to really get to the bottom of issues, or get some of those issues that we've found remedied in time. So but we hope that very soon we'll be able to announce something, as I said, I'm as well very eagerly looking forward to new acquisitions that would add to the bottom line, to the not only to the net operating income, but also to the net cash flow of the fund as it stands today. Investors have asked me as well that, do you still find good properties and decent yields? And the short answer there is yes, but it's becoming more and more difficult. CBD prime yields today are definitely below 7. The good thing is that the banks are still lending, and especially to very good, strong market players at exceptionally good rates. And overall, some of the loans that we signed, 3-4 years ago, we're able to renew them today at even better conditions. So the low cost, interest environment currently stands. We see some slight movement upwards in swap rates. So the market is expecting, Euribor to start climbing, especially as the economy of, European economies are doing very well. So we will probably see a gradual increase there. But then again, to answer whether we find good opportunities, then we do, and we just have to work harder. We have to work hard on being able to actually, if we buy a property at, let's say, 6.5% yield, potentially, then we'd have to work very hard to see how we can actually increase the NOI and the yield upwards. And so it has not been easy to find good properties. We have turned many of them down, but I'm confident that especially this year we can close some very, very interesting deals still. Now, to complement as well the decrease in yields today in the market and new acquisitions, for example, we are working very hard on finding value in our portfolio. And I've identified for our team, 4 priorities. One is to definitely complete the third stage of Domus Pro. That is actually a picture which I took today. So just to show that that in Vilnius the third stage is being completed. There's it's an office building with 2 underground parking floors. The tenant interest is very strong. It's a very good offering. The rental level below 10 euros. It's a BREEAM certified building, very efficient,
costs,
surcharges, and the location is very convenient for certain type of tenants. I'm very happy with the building quality. Our partner TK Development is doing a very good job there, and really happy to see finally the complex being full. One of the key arguments and also reasons why some of those tenants are signing up in the office building is that you have a selection of everyday shopping. You have you have many cafeterias there. You have the health club just next door, one of the very best health clubs in Vilnius, I would say. So excellent tenant mix overall. Very happy about that. We're looking forward also to make sure that what kind of building rights and what kind of property we could actually build on a G4S building land plot. Of course, we'd have to consider the cooperation with G4S during that period. That's a discussion also to be held. But we're just trying to make sure that we're able to move forward with also this expansion and create value for the investors at very, very attractive yields. Coca-Cola Plaza expansion, I've been talking about that in several cases. We've been working with the neighbors and also on the plan to build building together with Postimaja. That architectural process is ongoing, and this is something which is also one of the key priorities when managing the current portfolio, and Europa repositioning, which I talked about. And in addition to making a few acquisitions, the outlook for this year, we're also considering the sale of Sky, as I mentioned a little bit earlier. So I guess this is it. So let me see if we have some questions here. And thanks for listening. The question about Acropolis in Riga. Acropolis shopping center is being built today in Riga, and the question is that do we have a plan to acquire it? And I think first of all, this property will not be for sale. It is, these large shopping centers, that also T1 in Tallinn. I don't think first of all they're going to be for sale. But it will definitely change the retail market. So we're quite careful about retail investments as of today, because it will definitely affect the retail scene, and we have to be really analytical about how and which properties will be affected the most. Currently, with our current portfolio, we feel quite comfortable because our retail, what we have, are either located in the CBD, in the heart of the cities, or are neighborhoods, small shopping centers. So I think who will be affected the most are probably similar-sized, large shopping centers. Sort of destination shopping centers, for example, in Riga, there's many of them. For example, Riga Plaza are quite close by. Also, Spitz and Alpha are one of the leading shopping centers, large scale. So interesting to see how that will pan out. Another question. It is a question about capital attraction costs, and yes, as I described, those costs have been a little bit of a nuisance as well, from the management side, and myself being an investor, it's something that we need to definitely optimize. So. And we have I think strong expectations that those will decrease, and definitely that would support the cash flow of the portfolio. So yes, if you talk about, for example, some investors have also asked me, you've had now a 4 dividend payouts, soon now on Thursday we'll have the 4th one, and per unit this has been decreasing every time, and it is true that it has been decreasing. I think the last decrease was definitely mainly affected not by the capital attraction costs or fundraising costs or offering costs, but mainly because we had not been able to invest the equity by that moment, and well, we'll be I think we'll be working very hard to in the future to really match the new capital increasing to the acquisitions. I think there's some improvement there that we can do, even though it is difficult. Because, for example, if you make an acquisition in August or September, then capital markets in August basically are sleeping, and so are the investors all on vacation. So it's a challenging game of matching. But yes, to answer the question shortly, the proportional decrease of capital increasing costs will definitely positively support the future cash flows. I don't see at the moment additional questions. I'll just leave another minute if somebody's still willing to ask. Of course, this information is largely also available from our annual reports and on website as well. If you've been able to obtain the review by Swedbank analysts for the fund, that's a very good read as well. Unfortunately, we cannot share that ourselves, but yes, if possible, I think that is available in Swedbank's investors section as an outside view of the portfolio. Okay, I don't see additional questions, so perhaps then. Okay, I think one more question. It's a question about changes in tenant mix in Pirita Center, which is a neighborhood shopping center that we acquired in December. The question is that how much of that these changes now currently after the acquisition are covered by the seller. At the moment of the acquisition, it was let's say a big discussion about that since it's a new shopping center to be open, the seller should and would remain as a partner, just to make sure that an optimal tenant mix is achieved, and they have given a guarantee, NOI guarantee, for the 2-year period. So in certain cases, we have terminated lease agreements in some of those small tenants. Just to note, it's approximately 10% of the net leasable area that we're talking about. So it's an important important aspect of the center, because it's also it needs to really cater to the local people. The change of tenants, yes, it is covered by the seller. So and they are also covering any kind of let's say shortages in NOI, which is a result of some of these tenants changing. So yes, we're working very, very closely with the seller in this matter to make sure that the tenant mix in 2 years will be the one that we'd really like to see. And the question is, what sort of tenants we'd like to see? We'd like to see destination tenants, and I think we have some of those already there, but but not really happy with, for example, with the wine shop that we had there, and some of the smaller food outlets. I think it needs to be, we need definitely to think about finding tenants or signing up tenants that offer health products. I think consumers are exceptionally savvy about that lately. But as well, wine shop that really is a strong name that people know, and and they would go to the center specifically for that tenant. Also services. But we'll be working on that, and it is usually about 1 to 2 years when the final tenant mix is being put in place. The same case in Domus Pro. When we completed the first phase in 2014, it is only now, basically 4 years later or 3 years later, where we see the full tenant mix actually realizing, and it just takes a little bit of time. Okay, 50 minutes in. It seems there's another question. More insight on the potential expansion that we see in G4S building. We're working on, there's when we bought the property, there was an architectural sort of vision that the seller gave us, and they actually were competing for Telia, which is one of the key anchor tenants now that has been signed up, in Tallinn market. They are now opening their headquarters quite close to G4S building, in another building. So what I understood, that in this architectural competition, G4S became, or the expansion project became second, and so we have actually taken that architectural project that was meant for Telia now, and we're working on it. We're actually trying to find what is the best mix of parking and office net leasable area. You could build a lot on that building, on that land plot. Actually, the detailed plan allows, if I remember correctly, a total gross, built square meters of close to 30,000, and today 11,000 has been constructed. The land plot is, of course, not capable of really getting the maximum square meters in place. So we're really trying to find the efficient mix that construction-wise would also not be so costly. There's also a city land plot which is behind the property that potentially could be used for additional parking. So it's a little bit too early to talk about what exactly we can offer, but soon we will definitely have a product that we will be competing in the market. Even though Tallinn market is very competitive now in the office sector, that doesn't mean that we cannot compete with our project for anchor tenants. So we'll definitely be doing that. Okay. Other than that, questions are always welcomed. So you can drop me a line over email as well, and if I can respond to that, I will. And it's only a few months when we are going to have a new webinar. So at this point, I would like to thank everybody for attending, and hopefully this was informative, and especially about the future outlook. So thanks again, and I wish you all a very nice end of the week.